China approves new gold-backed ETPs, and Deutsche Bank opens a new gold vault in Singapore. We're talking gold and Asia with Peter Hug. Peter Hug joins me now. Peter, thanks for being with us.
My pleasure.
So, Peter, Deutsche Bank becoming the latest bank to tap into people's appetites for precious metals vaults. They just opened a new safe deposit in Singapore. It's capable of holding up to 200 tons of precious metals. And they said it was a move in order to keep up with storage demand in Asia. So we saw this news item along with China now approving a gold-backed ETP. What do you think of these two news items we saw Monday?
Well, I certainly, I think if the ETP takes off, the result in the physical offtake in the market will dwarf what was taken off in the market with the ETFs in the U.S. We're still seeing strong demand coming out of Asia. I mean, not as frenetic as it was back in April, but we still have good physical demand coming out of our Hong Kong office, and there's a lot of exports going into the Singapore market. Deutsche Bank following with its 200-ton depository announcement this morning, but JP Morgan built the largest depository in the world in Singapore last year. The banks are seeing that the wealthy Asian investors are still buying precious metals, and they're buying it in physical format.
Peter, what do you think is the strategy behind these two programs? Is it a coincidence they're both happening in Asia?
No, I don't think so. I think the primary physical demand, global demand, especially for gold, is coming out of the Far East. The U.S. demand, believe it or not, is primarily silver, silver-related investment products, not so much gold. But our sales volumes out of our Hong Kong office are skewed about 80-20 in favor of gold over silver. And, the Chinese have a tendency of wanting to hold and take delivery of physical gold. They don't trust paper assets. And this ETP will be backed by physical gold. And as seen in our Hong Kong office, almost every one of our clients takes physical delivery or holds it in an allocated storage account.
Peter, why do you think there might be this increased appetite for precious metals right now in Asia? Are they simply taking advantage of the lower gold prices?
Well, I think that helps, but I think the Chinese are relatively intelligent people, and they have a lot of money invested in the U.S. dollar, in the U.S. bond and treasury markets, and some diversification away from the dollar is prudent. And for them, buying precious metals is something that they're comfortable with, and they tend, when they buy, not to be traders. They tend to buy and hold for long periods of time. So this ETP could take off some serious physical supplies in the market over the coming years, assuming it takes off. We're still unsure. I don't know all of the ramifications to the ETP and what the restrictions, if any, there are. But if it's an open ETP, open to Chinese residents, I suggest that it could have a significant impact on the physical supply of metal.
Peter, still sticking to Asia, let's look at the Japanese yen. Today it is weaker against the dollar. If it gets stronger, is it bad news for the precious metals?
No, I think it's the opposite. I've been following the yen-dollar trade, and as the yen has been weakening, specifically through the 100 yen level early last week, gold has been under pressure. And when the yen started to unwind and strengthen, and the yen actually went up from 103 to 95 to the dollar, gold prices actually had a pretty good surge, testing a very strong resistance level at 1424 on Thursday of last week. Today the yen is back down. It's down in around the 99 yen to the dollar level. But we're waiting for the BOJ to make its announcement to see if there's any further easing. If they hold pat, I suggest the yen might strengthen in the short term, and I would consider that bullish for gold.
Peter, finally, what else should investors be looking out for this week?
I think this is a dollar play. Just to give you, Standard & Poor's came out this morning and increased the credit quality of U.S. debt. Should have had a fairly significant impact on the stock market, and it didn't. The stock market is flat to down. I suspect it's the psychology that if the ratings agencies think the U.S. economy is strengthening, you go back to the argument, well, the Fed will then not ease monetary policy, the old Fed story again. And I just think that's old news. So take that out of the equation. I'm watching the cross rates of the dollar. I think the gold market is going to be sensitive to the value of the U.S. dollar this week.
Wrapping it up now, Peter, support and resistance levels for gold.
Well, 78 held well on Friday and held again overnight. I suspect if we lose 78 on a closed basis, I think we may get a test of 1360. But you want to be bearish this market, but I'm still constructive. I still think there's a possibility that this market is going to scare the shorts and something's going to come up here, and we may see 1400 tested again.
Peter, would you say that's just something you feel in your gut?
Yeah, that's the problem. I mean, last night I got up at 3 a.m. and I looked at the Asian trade, and I did a quick mathematical calculation on how far silver had dropped last week relative to gold, and on a percentage basis, it had almost dropped double the percentage. So I looked at silver and I said, it might be worth a shot here, and we picked up some silver in the 2157 July area, which looks like a great trade this morning. And again, yeah, sometimes it's a gut feeling, and it sounds silly to say, but. And it must be sort of latent memory from 30 years in this business. But sometimes you just get a feel, and it just felt like this market was not going to tank this morning. And taking the long side of the silver trade proved to be a good trade.
Really good thoughts, Peter. Thanks so much.
You're welcome, Daniela.
And thanks for watching this edition of For Pete's Sake. Email us. We want to hear from you. Newsfeedback@kitco.com, or follow this conversation on Twitter @Daniela Cambone. Thanks for watching.